Hey there, it's J-Rod here for Rich Retirement TV, and today I want to show you 3 fantastic small cap stocks that you can get excited about right now, building on my video from last week where I told you why small caps are my favorite kind of stocks. We went through 6 charts about why they're great, why they're poised to outperform over the next 12 to 24 months. This week, I want to focus on the who, so to speak, right? Which stocks do I really like to outperform? You might ask, J-Rod, why aren't you talking about inflation? Why are you talking about interest rates and the drop in tech stocks? And I'll put it very simply, because they don't matter. Stocks are the place to be, right? You're not earning anything in cash. You're not earning anything in U.S. Treasuries, right? The 10-year Treasury is still yielding after interest rates rising. It's yielding just 1.56%, right? That's nothing. You're not going to retire on that kind of money. If you're behind on your retirement or you're just looking for income, being parked in treasuries is absolutely not where you want to be. You want to be the stock market is the place where you can really catch up. And there are plenty of opportunities, to make, way more than that. Go back to the 1950s, 1950s, 60s, 70s. You go all the way back. The stock market returns 7-10%. When you include dividends, in good times, bad times, annually, you're going to earn more money in the stock market than you are elsewhere. Take any other asset class, this is the place you want to be. That's all I'm going to say about it. Don't get caught up in headlines. Keep your eyes on the prize, which is generating the maximum return on your hard-earned dollars so that you can live the retirement that you want. So with that, let's go and take a look at small cap stocks, which are, in my opinion, the fastest way to get to that rich retirement. All right, so boom. Let's just take a look here at this chart here. This is the IWM. This is the iShares Russell 2000 ETF. And again, we've heard a lot. We've seen a lot about tech stocks getting battered. IWM has done pretty well. In fact, I'm looking at this on Tuesday here. We're up 2% on the day, and we barely tested the 50-day moving average as compared to the NASDAQ. That took a little bit more of a beating. Traded below the 50-day moving average. Doing better over the last couple of days, but still not holding up as well as small caps. And again, we talked about this last week. Small cap stocks coming out of a period of extreme underperformance, which is rare considering you look back on small caps going back 30 plus years. This is small caps time to shine. And you take a look here. This is a chart of the IWM, that the small cap ETF against the major indices over the last 6 months. Look at it. Small caps are blowing away large caps by a wide freaking margin here. Almost 50% gain for small caps in the last 6 months compared to 20% or less for the NASDAQ, right? So, go with strength. When you don't know what to do, stick with strength. And small caps are building on strong momentum, and you got a lot to love here in the next 12 to 24 months. So, without further ado, let's talk about the stocks that I like this week. First stock on my list is IYES. Company's called Second Sight Medical Products Incorporated, ticker IYES. And before you say, "Oh my goodness, J-Rod, that's a chart, that's just a shooting star that's going to come back down to earth," no, it is not. Take a look here. Basically flat. This is a small company. They specialize in giving sight to the blind. They focus on ocular implants, and they've had a major announcement. FDA has approved one of their latest implants, and it's done very. Investors are very happy about this because it means big growth. There's a lot of there's a lot of need, not just for folks that are born blind, went blind, but we've got plenty of older folks here in America, all around the world, with degeneration of their eyes, that need, that could use, second sight, so to speak. And this is where Eyes excels. And this is a major decision, approval for the company. And you're watching right now revaluation of the stock happen in real time. And it's a beautiful, beautiful thing. Let's go ahead and turn on the X-ray vision, we like to call, throw on a log chart. We've got a huge breakout of the stock here above, say $3.40. In the last couple of days, we saw 300+% day on Friday. We saw, another almost 150% day at the high, on Monday, and on Tuesday here we're just coming off a little bit. But this is a stock I believe has a lot of room to run. I think this is a stock that is heading for $20. Or higher as you move forward. This is the big breakout, right? I love breakouts. This is the big breakout that you see over the longer term period. I've just put up a weekly chart here of Eyes, and you see, while you might look at the daily chart and think, oh, this is a shooting star, this is the kind of stock that's going to come right back down. No, this is a breakout. You take a look here, you got a massive breakout here above the 200-week moving average, which is roughly 5 years or so of time in the stock. This is a huge breakout here on very, very strong volume. Look for the stock to hold here above $8, which is that new, that was resistance. Now, looking to test this here as a support. As you can see, stock's well above $8 now, and this is a good entry point, looking at that breakout above that 200-week moving average. You've got that as support. You've got the breakout point here at, you've got $6 here, at 6 and, down to 350 is, multiple levels of support. You're trading well above the 50 and the 200-day moving averages. A lot to love here. I think this stock is definitely moving back to, back at 220. This is stock you can see as as things open back up into the world, and as Eyes gets more products out to the public here, this stock can make its way. You could double or triple from where it is here over the next 12 to 24 months here. So a lot to love here in Eyes. Let's look at the second stock on my list. It is CAS Information Systems, and they are they're an industrial fintech company, financial technology, and they basically, in a nutshell, they do payment processing for big industrial companies that have very complex, financial statements, very complex payments that have to get made. CAS specializes in it. They've got a 100+ year pedigree in the financial industry, and now they're combining the best of what they do in finance with technology, and they're what I like to call a beautiful butterfly hiding in caterpillar's clothing. Right? They're kind of looked at as an industrial stock, but they're really a financial technology company that is doing big things, but still kind of looked at in the industrial space, earning industrial type valuations where they should be earning a higher multiple. But take a look at the chart. That's what we do here. You've got a beautiful breakout here, about $45 a share. That's from the point of the low here in 2020. You've got this beautiful kind of triangle pattern. Let me move myself out of the way here. The ascending triangle here, which if you watch my videos, I love so much here. My price target in the stock, you take this the low here around $30, in the top here of this range here at 45. That's $15. You throw that $15 on top of the breakout point at 45. That gives you a price target of $60, which is well above where the stock is trading now. And again, it's industrial companies really gear up here, not only just with the economy reopening, but on the heels of what could potentially be a massive infrastructure bill. CAS is in a prime position to do very, very well. As it moves, as we open up here. So a lot to love here. Last stock on my list, Nielsen Nielsen Holdings. And if you're I never had the luxury of having a Nielsen box in my house, but Nielsen is a company, a data company that has been surveying television and audiences and other types of media audiences for many years. You used to be able to get a Nielsen box in your home. I mean, they still do it, but to a smaller degree now. You get a Nielsen box in your home, and it measures what you're watching, and that's where ratings come from, right? TV ratings, and that's TV ratings are the number one indicator of media strength, right? Being able to ratings, the higher a show television program is rated, the more television companies can charge for the advertising that goes in that space, right? You're maximizing dollars of revenue per eyeball. And so Nielsen, as the world has shifted from traditional television into new media, streaming and whatnot, Nielsen has been making a shift, and they've actually they're jettisoning parts of their business that are not focused on moving the needle for them, which is going to be the streaming world. They just sold off their digital video advertising business to Roku, and they've really cemented a partnership that'll provide probably one of the best, most comprehensive breakdowns of digital audiences yet. I mean, Roku themselves, they have a very large user base, 51 million plus Roku accounts in use, including one of mine. I've got a couple of Roku devices in my house. It's a great product, but Nielsen is leading the way higher. And you just take a look at this stock. Whoo, beautiful. I mean, more than doubling off of just in the last 4 or 5 months, but really doing well over the longer term. So I see this stock. You see the breakout point here at 8. You see the most recent breakout here at $25, but this is a stock that has bottomed very nicely. Let me put on the long-term chart. This is a stock that's in a downtrend for 4 or 5 years here, but is beautifully based here. We've got a double bottom pattern here. Really the range being from roughly $12 to $18. That's a $6 range. You slap that on top of the breakout here, that gets you right about $25 a share, and that also happens to be where the stock broke out. So we break out of that second kind of breakout period, and get another breakout here above the 200-week moving average, right? So, take a look at this the daily chart again. You see that beautiful lower left to the upper right action, but you've got a lot of positive momentum over a longer period. So this isn't just like a shooting star type thing here. And you got that breakout here above 25, and above that 200-week moving average. If you take really the top here of the range at just about $56 a share, and the bottom here, just about around $12. The stock is just heading, it's just above $25 a share. We're heading back to the midpoint of this range here between 56 and 12 here. So my price target on the stock is $34. That's the midpoint of the 2016 to 2020 range, and then I believe the stock can easily head to $50, which gives you upside here in the stock of nearly double from where the stock is now. So a lot to love here. And again, you take a look at these. All three of these stocks are small cap stocks. They are technology geared, which is it's sold off in a bit in the last couple of weeks. But you've got a great entry points in these three stocks. These are breakouts, and this is where you want to be. When you're looking at any stock to get into, tech, regardless of the sector, you want to get in around breakout points. That gives you the highest level of safety when you're entering a position here. So take a look at these three stocks. EYES, that second site, ticker EYES, CAS Information Systems, ticker CASS, and Nielsen Holdings here, ticker NLSN. A lot to love here. Again, to go big, you got to think small. Start with these three small caps, and thank you so much for watching today's video. I'm J-Rod for Rich Retirement TV, and I'll see you next week.